Hey, this is Don Kaufman. You are watching the Theo evening video for September 12th, 2016. Just when you thought we were out, they're pulling us right back in. A rip and rally in the S&Ps today, taking markets 1.7% higher here with just about 11 minutes to go to the close. But there's a very specific reason that I'm recording this while the markets are open, and that's to display to you exactly my last comment is, hey, we thought we were out and they pull us back in. What does that really mean? Well, for the previous 7 weeks of trade, I've been talking about very definitive levels in the S&P futures, specifically 2160 to the downside, and to the upside it's been about 2180, and we've been inside of those ranges, okay, legitimately for like the previous 7 weeks. Obviously Friday we crack to the downside of that, but here we are just one trading day later, and oh, what a difference a day makes. See, the fact of the matter is a lot of traders, okay, will be looking at the current futures contract, which happens to be here on your left hand side of the screen, the Z6. Well, that happens to be the December contract. There's a roll going on right now. And right up here, kind of towards the center of your screen, you can see the roll. There are still 4 days, though, however, left inside of the September contract. And it's the September contract that we've been quoting the levels off of. So last week, Friday, they roll the contract forward. Now everybody's watching this active contract, which again happens to be the December. Both contracts are seeing nothing less than kind of monumental volume today, but it's important to migrate your levels forward. Let me kind of do that with you here. So instead of typing in /ES, and this is specific to thinkorswim, got to type in the full symbol /ES U6, and the U6, okay, when we hit enter, is just going to be the September contract. Now we're going to go over to a chart. Why are we looking at the chart? Because now we're looking at the September contract, and very specifically we're looking at trade, well, for pretty much like the last 7 weeks. And I'll zoom out and zoom kind of back in over here, but for the most part, as I kind of zoom out on this, you kind of get the drift of what I'm saying. This happens to be and again, very, very specifically, a 1 hour chart going all the way back to, again, this time frame of mid-July. And we kind of established a very specific level here to the downside. We were talking about it last Friday, all right, of 2160. Clearly, all right, we smoked that level on Friday, only to be pulled directly back in it. Now, I've been talking about for the last couple of weeks this gigantic ball of risk that exists right inside of this channel here. The longer you trade in a particular channel, okay, the more intensity actually builds in there. And what that means is it's just, again, it's risk. Contract size is being put on, contract size is being put off, okay? However, the longer you trade inside of a given range, the more contract size that accumulates inside of the range. And that could be contract size that's even traded as something as far out as January, December. Okay, a year from now, that risk is still being put on at these levels of this 2160, 2180. So all of a sudden we crack the range. Here we are, you know, a couple days later on Monday, obviously the next trading day, we trade right back into the 2160 range. Why? It's because that's where the risk happens to be. Now, if you are kind of a market technician, you know, you're like, okay, is this like support and resistance? Not exactly. But what it is looking, right, of how the institutions are hedging degrees of their risk. Again, we explode right back up to the fateful number of 2160. Boy, and I thought I was done talking about 2160. Now, more importantly than just this range over here, there are some fairly definitive things that you want to consider for the coming days over here. Again, clearly we're right back inside of this 2160, possibly 2180 range. Looks like we're going to close just below it. But here's some points that need to be made that don't slip back into the it's okay. We're all going to be fine. All right. Why am I saying that? If you look kind of down the list of some of the usual suspects, one of the things that lots of traders like to look at is something called the VIX. So, all right, I'm going to do it justice today. We're going to take a look at the VIX. Then I'm going to take a look at what I like to look at. Here's the VIX. So the VIX explodes last Friday, and it comes in today. We got most of the losses back from last Friday, but the VIX didn't come in nearly as much as you would expect. So what does this mean? It means volatility is still left on the table. More importantly, the short-term volatility indications. Okay, it's called the VXST. The short-term volatility index came in even less. This is a 9-day look at volatility. Lastly, if you take a look at the VXV, the 90-day volatility, it did come down quite a bit. But again, it's still leaving quite a lot of risk on the table inside of the coming days. Now, of course, everybody wants that forward-looking statement, right? So, Don, where are we going the next couple of days? Well, where we go in the next couple of days, again, volatility is still relatively elevated versus where it was, of course, last week. So we've had some, again, fairly phenomenal movement both on Friday and today, some follow through today. Question is, was this just a bounce that's going to be sold into tomorrow? Hey, quite possibly. I mean, there's no question that traders are in here trying to buy the dip. There is no forward, looking guidance that I'd be comfortable giving, other than the fact that you really do have to consider, once again, this 2160 level. By the way, 2160, for those of you that are aware of this, the 2160 level, we're just going to close below it, seems to be, to a degree of resistance. It's also the December 2150, 54 level. So 2160 translates to right around 2154 on the current or December contract. Keep it in mind in just the days to come. So as of today, there is no more Fed speak. They're going into a quiet period. There is an FOMC meeting next week. Nevertheless, the volatility from where I sit is going to persist. Most notably, the most volatile product I would say on the day that I've seen happens to be inside of the financials. The financials, which again on Friday were crushed hard, even in the after hours, didn't just come back today. They exploded in what has been a phenomenal range. So if you look from low to high today inside of the financials, you have about a 60-cent range. And why that's interesting, the next 4 days are only showing that they have a 44 cents range. So we're exceeding our expectations by far and large. Additionally speaking, so volatility kind of came in a bit today, but not nearly as much as we would have expected. There hasn't been yet that excellent time, if you will, to sell option premium. Believe me, I am looking for it. So that's one of the most important things in the couple of days to come over here is, well, where are we headed to next? Hey, great question. Everybody's sitting on pins and needles wondering the exact same thing. Believe me, order flow, allow it to dictate what's going on. On a day-to-day basis, this is going to be a nimble marketplace. There isn't much forward guidance. And again, we'll use this level of 2160, as it was support. Now it's a bit of resistance over here. We're going to close below it today. Nevertheless, there isn't, again, much forward guidance on that front, other than the fact that volatility remains elevated, which means that in the coming days, you're going to see some fairly vast movement inside of the S&Ps. And you're like, didn't we already see that? Yep, but it's going to continue. Volatility, it's out there. I've kind of unleashed, Pandora's box upon the marketplace that has been rather docile day in and day out for the past 7 to 8 weeks. So here we go. Volatility, whether you like it or not. One of the ideas I'm going to be looking for in the coming days over here is to see if there's actually some follow through to the rally. Might give us an opportunity to sell into it and actually fade the rally. Again, I've already got established a couple of bearish positions. Nevertheless, it's always good to kind of re-up in the midst of, a 1 or 2% move to the upside. So be thinking about it in the days to come. One other area thinking about, if you are looking into doing these risk twist spreads, I'm going to be doing a full class on the risk twist spreads this coming Saturday. That's September 17th. It's just TheoTrade.com/ twist. The reason I mention it, now better time than any. Volatility came down, market came right back up. If you need protection, we're going to show you just how to do that. Again, risk twist class coming up this Saturday. Thanks everybody for joining us here at TheoTrade. Have a great evening. Bye-bye.